Good evening, everyone, and welcome to today's webinar. My name is Adil Rashid, and I'm a member of the Aga Khan Economic Planning Board for the UAE region. On behalf of the chairman and the alliances, I welcome you all today. We would like to thank you all for taking the time out of your busy schedules and joining us for today's session on blockchain and cryptocurrency. FAPA is a voluntary initiative under the Aga Khan Economic Planning Board. We have identified that a substantial number of our community members are engaged in the field of finance or accounting. FAPA aims to bring together professionals to collaborate in adding greater value to their profession or business, as well as leverage members' expertise for social benefits to the group and the community at large. Today, we will explore how blockchain could disrupt the banking world, as well as the benefits achieved from implementing blockchain within business processes. We will also touch upon trending concepts such as decentralized finance, non-fungible tokens, NFTs, and other cryptocurrencies like Ethereum. The agenda for today's webinar will be an introduction of the speaker, followed by his presentation. It is a privilege to introduce our speaker for today's workshop. Ali Madhavji is the managing partner at Blockchain Founders Fund, which invests in and venture builds top-tier startups. He is a limited partner on Loyal VC and rapper Goran Home. Ali consults organizations on emerging technologies such as INSEAD and the United Nations on solutions to help alleviate poverty. He is a senior blockchain fellow at INSEAD and was recognized as a Blockchain 100 global leader by Lattice 80. He is an internationally acclaimed author, publishing 3 books and a monthly columnist for the leading blockchain magazine. Ali serves as a board member of Toronto-listed CryptoStar Corporation, NASDAQ-listed Mechanical Technology Incorporated, and has served on various advisory boards, including the University of Toronto's Governing Council. He holds a Master of Global Affairs as a Schwarzman Scholar from Tsinghua University, a Master of Business Administration from INSEAD, and a Bachelor of Commerce with distinction from the University of Toronto. Once again, thank you, Ali, for giving us your valuable time today. I now hand it over to you.
Thanks so much, Adil, for the kind introduction, and Yalimat, everybody. I'm thrilled to be here. And I know there's a lot of questions that everyone has in their mind about what's going on in cryptocurrency and blockchain. I think one of the best ways to start off with this is to just give you a very quick overview of blockchain technology and sort of how we see it solving certain challenges. And we're going to do that by going through different industry sectors to see what's really going on in those industries. And we'll touch on, where some of these components really fall into play, like decentralized finance, like NFTs as well, and some of the other things you're hearing about. And at the end, we can take questions. So we obviously don't have enough time to go through everything, but if you do have pressing questions, then we can answer those as well. And so the way that we look at blockchain, we've got, over 55 companies directly in our portfolio around the world, across 6 continents. And, we look at blockchain as solving multi-party trust issues. And there's a lot of situations where trust can come into play and where there's multiple parties as part of that. And this is, a very big part of what blockchain is inherently doing. And I'm going to touch on some examples that'll make that more clear. We're also seeing, very big impacts right now on, automating very simple, prescribed processes in a more formulaic way. And we're seeing, for example, the creation of being able to track any sorts of digital goods or any goods in a digital manner. And I'm going to touch on how some of these things are actually coming into play. And we're going to start off with, talking about supply chain as a first sort of case of what's going on in blockchain. And then we can touch on some of these other industries like banking and finance and what's going on even in the education sector and entertainment, et cetera. All right. So as mentioned, if you do enjoy this and you think that there's some interesting insights, we do cover and write in a lot of leading publications like Cointelegraph and many others, very often, every month or so. And so feel free to take a look at some of the latest things that, we're covering and some of the emerging trends that we're seeing. And so, we're gonna focus a little bit more on the blockchain side rather than, the cryptocurrency side, but we're gonna touch on some of the areas where cryptocurrency is having a big impact. And so Deloitte and Touche did a survey of 1,053 senior executives, and they asked what were the best use cases for blockchain technology in organizations. And 53% of those respondents said supply chain. You also had a couple of very close, options that came up, which were Internet of Things and digital identity were very high on that list in the 50%. And then you had in the 40% range, you had digital records and digital currency, and payments came in at 30%. You do have voting that came in quite low here at 12%, even though you oftentimes hear that voting is a good use case for blockchain. So the reason why voting showed up very low here is this is a survey to corporate executives, and corporations don't use voting structures too commonly. They don't run as a democracy in an organization. And so that's why you have something like voting, which is actually a good use case, show up fairly low on a survey like this. I want to deep dive first into supply chain and run through what's actually happening there and use that as a way for you to understand how blockchain is actually making an impact to solve some of the challenges in that space. And then we'll go into some of the other industries and where blockchain is making an impact. So some of you may be aware of some of these food outbreaks that have happened in the past and some of the traceability issues in relation to those outbreaks. So you had, cases that have happened all around the world. So in Asia, North America, Europe. And so in China in 2008, you had the tainted milk scandal where 300,000 sick babies, were sick from melamine in their infant milk formulas. And there were 6 fatalities. And if you're familiar with China, this is still something that rocks the country to this day. A lot of policy that's created in China actually relates to this. In North America, you had a very similar, in some ways, similar outbreak with E. coli, and you had 55 customers ill in 11 states at Chipotle Mexican Grill. I'm sure it's a restaurant many of you have been to, and this resulted in a 42% decline in their stock price. And this is $9.8 billion of shareholder value. And so very big issues because they couldn't trace quick enough through their supply chain to figure out where was this E. coli outbreak coming from, which suppliers were involved. And again, another case in Europe in 2013 with the horse meat scandal. And this is where meat was advertised as beef in as many as 13 countries as 100%, which was 100% horse meat, but they were labeling it as beef. And 85% of these samples had traces of undeclared animal DNA. There was, banned drugs from sport horses that were entering into food consumption, which, humans are not supposed to be consuming. And this was in major supermarkets like Tesco and many others that, I'm sure many of you have shopped at. And so this is a very big problem. And this happened in 2013. Interpol was still making arrests in 2017 on this issue. So 4 years later, they still hadn't gotten to the bottom of it. And so how would this get impacted if you had a blockchain layer? So let's go through some of the benefits of blockchain first, and then let's go through what would have happened, in one of those cases. So some of the benefits of blockchain are around the transparency, the accountability, and the auditability. And so, really seeing what's going on as part of this process with multiple parties. And so, this also is to reduce error-prone manual reconciliations where, you now don't have to be entering the data always manually, but you can be pairing it with technologies like IoT, for example. which is getting to be more common. And then real-time updates on what's going on in your supply chain. When someone enters something, the other parties can start to see it right away. And you've got improved disclosure and accountability when interests aren't aligned. So let's go to the case where you had this mislabeled beef in Europe, right? So in that case, that was intentional, right? So it was entered, intentionally to mislead people. So in that case, you would have horse meat that was entered as beef onto a blockchain, and all downstream participants would think that that's, beef, but it's actually horse meat. So now you can't change who entered in this information into the system. And so blockchain doesn't solve this garbage in problem. If you have bad data going in, it doesn't actually solve that. But what happens is in these food systems, in regular food supply chain, you've got food sampling, DNA sampling, et cetera, that's happening consistently. So as you actually do that sampling that already occurs today, you would very quickly know who are all of the parties involved as part of that piece of meat or other, ingredient, et cetera, exactly who is involved as part of that process. So, who were the, where did the original, breeding come from? Where was that cattle, say, raised? What slaughterhouses, packaging facilities, et cetera, were involved along the entire process, and you would know that instantly. And I'm going to touch on in a few minutes even the speed at which this is improved already in live scenarios for companies like Walmart. But you can see pretty quickly that you would actually know all of the parties involved. And so when you do that DNA sampling, you can get to the bottom of it much quicker. I'm going to go into a couple of examples here of where this is already happening. And so one of the pioneers in this space on supply chain has been Walmart. And so Walmart and Tsinghua University, which is my alma mater out of Beijing, launched a food safety collaboration and innovation center in Beijing. And this was to prevent national foodborne outbreaks. And I talked earlier about that melamine scandal in China in 2008. And a lot of this, actually, these policies, this interest comes from, those sorts of issues that happened in the past. And so China, with Walmart China, was working on putting pork on chain. And so that would include, the processors, the producers, the processors, the distributors, and the grocers, and all of those middlemen. And you can typically have 20, 30, 40, 50, parties touching, each product as part of that supply chain. And so they were tracking data such as farm origin, factory data, expiration dates, storage temperatures, which in a lot of cases is through an IoT device, shipping information, et cetera. And that actually went very well. And I'm going to touch on in a second what Walmart's done since. But other companies are also doing this sort of thing. So Jingdong, JD, one of the largest B2C companies in the world, was actually doing this with beef. So you can see on the right-hand side what that looks like. And of course, that's in Chinese there. But, a consumer can now see, what was the cow's breed, the weight, the diet, was it grass-fed or grain-fed, the origin, even who the veterinarian was. And so you start getting information that you might be willing to either pay more for as a consumer or would be more loyal to this company because of the transparency that they're giving you versus their competitors. And so this starts to create an interesting competitive advantage for these companies. And you're seeing all sorts of pilots happening right now all around the world with, alcohol, food, tea, pharmaceuticals, all sorts of different products, that are tracked, that are worried about outbreaks or authenticity, et cetera. So this has actually been one of the more recent cases of what Walmart's done. And so after that, some of those pilots that they were doing with pork in China, they wanted to actually do something that they felt was much more complex. So they wanted to track sliced mangoes in North America that was coming from suppliers in South America. So if you walked into a store in the US into a Walmart and said, where did these slices of mangoes come from? They wanted to know exactly which players were involved on the entire process. In the past, this used to take them 7 days to trace through all their documents to figure out who were all of the people involved in this, because there's so many different systems along the way. So now this is fully live. Walmart can do this in 2.2 seconds. They know every single party that was involved. And in a lot of cases with this specific case, there's about 50 different suppliers along the way. When you think of all of those parties that we sort of talked about earlier and all of those middlemen. So this creates substantial efficiencies, over 99% efficiencies in this specific process of what they consider to be a very complex tracking and tracing component of their supply chain. Now, in China, Walmart is working on actually putting 50% of all of their fresh meat, 40% of all of their vegetables, and 12.5% of all of their seafood on blockchain by the end of this year. Now, that's a pretty aggressive goal. We'll see if they hit that this year or if that'll be delayed with, the pandemic. But this is, I think this shows how big of an advantage this can start to give players like Walmart in those local markets, and how much trust and loyalty is going to come from their consumers from this. And there's all sorts of reports out there that show that seafood is among the most mislabeled products in the world. And when you start to see better labeling, traceability of these products to make sure that they're not mislabeled, it's going to start increasing likely the margins and the ability for Walmart to charge more on these products because of that increased value for consumers. So I think this is quite interesting to see some of these aggressive goals going on right now. All sorts of other things happening. You've got companies like JD that I mentioned earlier also using this to track product SKUs. And so they've got 60,000 product SKUs now for 700 brands. And what's interesting here when you think about it from a supply chain perspective, the part that I really want to touch on here is they're using it not only for anti-counterfeiting. So when we talked about some of those products that could be counterfeit, it could be anything through a supply chain, it could be handbags, etc. But what's interesting is this asset-backed standardization solution that they have. And so what they're doing is with all of the suppliers that are part of, these supply chains, they're now working with major banks like CITIC Bank in China, where those suppliers can actually unlock their capital because now the bank or the lender can trace exactly where that product is and in real time, and can actually offer lending solutions back to the suppliers that have capital or product locked up in that process, and can help actually get them, essentially loans to unlock that capital or buy those receivables. And that essentially creates and fuels these suppliers to now be able to produce more, to invest more into their products, and fuel essentially more end products. You're having interesting experiments right now. So there's a question on Walmart using their own proprietary blockchain or one of the public blockchains. So a lot of the corporate initiatives or enterprise initiatives that you're seeing are actually using private blockchains. So it's not fully visible or visible to the public, but their suppliers, all of those middlemen that I sort of mentioned, they would be able to see that data in real time. They wouldn't necessarily be able to edit the data. So if you input something, you can't try to remove it and say, oh, I didn't put that in. That's sort of one of the major benefits of blockchain. But those suppliers along the way would be able to see that. If they had lenders attached to that system to help create liquidity for buying receivables, for example, you would have those lenders then being able to see that data as well. So Walmart in a lot of cases is using Hyperledger Fabric, which is IBM's blockchain. In certain cases, they're also using VeChain, and I know they're testing out certain other blockchains. But it really depends on where. And right now for enterprises, Hyperledger Fabric is one of the blockchains that's having the most success. In terms of pandemic tech, this is just an interesting one given sort of the state that we are in globally, but you're starting to see cases where it's being used for healthcare records of patients. This is still pretty early, I think, in this entire process. You're starting to see companies experiment with it for, COVID passporting and ensuring that, people that have had the vaccine are verified and can't change those systems and it can't be manipulated. No one else can be added that shouldn't be added. All of that data is essentially traced and tracked through a blockchain. So you're seeing those types of use cases. You're also seeing, it being attempted to use for things like which residents entered gated communities in China, linked to QR codes. Now, these are all, interesting sort of early tests. So I wouldn't put too much weight on that, but I think it's interesting to start seeing these things happening. You've also got in China, and I'm mentioning China a lot because they are one of the leaders on this technology, driving it through a lot of enterprise use cases at the moment. But you're seeing Ant Financial use it on their Xianghubao platform for processing COVID-19 related claims. And the reason they used a blockchain, what they specifically stated is it helped to reduce in-person contact, paperwork, and document deliveries, and enable them to process large volumes of COVID-19 related claims. Now, some of this in reality, you can use centralized systems, but in a lot of cases, they're using this as well as part of, pushing sort of the boundaries, getting some of that credibility as well for being on the cutting edge. And in reality, it does help for those different parties in the middle, to see who's involved, and sort of what's processed, who are the different parties involved, what's the stage of, say, like audits, claims, all of those things, with different companies being able to access the same system, which typically, if you're familiar with insurance companies, they've got a lot of systems in play, and then a lot of partners as well that, again, would have their own systems. And so now you can start to get rid of that and start to consolidate those systems in some ways. Now, the banking and finance sector has been particularly interesting. And so you've got this centralized finance, component, as well as a decentralized finance component. So companies like HSBC on their private blockchain have actually been using, blockchain for FX settlements. And so they've now processed 11.6 million trades as part of their blockchain, which is processing over $1.2 trillion. And they've come out and said that, there's some major benefits to this, from balance sheet optimization, transparency, immutability. And they've actually come out and said that they've got a 25% savings over their traditional process of FX settlements. Now, it's hard to see how every major bank won't follow suit for a similar process. I mean, if you have a 25% savings, it's a very clear ROI decision on implementing something like this when you're, processing so much from an FX settlements perspective. And you've got a lot of other cases where you're seeing, this being used on that centralized finance component, and then that blend between sort of the traditional world and the crypto world, and then on the decentralized finance world. So you've got companies like Sendry using blockchain for actually doing cash-based remittances. So this is actually a very big part of remittances globally. If you think about migrant workers, even in Dubai, where you've got a lot of labor that's from other countries, in a lot of cases, they're sending money home by using cash and walking into a Western Union and trying to send that, home to Bangladesh or Pakistan or, other countries. And so Sendry is actually using a blockchain layer to do instant cross-border cash-based remittances. So you could walk into, say, a store in the UK in London and try to send money to your family, and 30 seconds later, your family can get the cash on the other side in Bangladesh. So very, very interesting how you're seeing this blockchain technology reduce that, 1 day or 2 day wait that you might normally have as part of moving money cross borders. You're seeing companies like banks power a lot of the credit cards in the space. So it's connecting, your cryptocurrency holdings to traditional Visa or MasterCard credit cards. And now you can actually spend your cryptocurrency in traditional stores, without having to say sell all of your cryptocurrency right away. So there's really interesting different things happening on the finance side. Um, you're seeing companies like Rapids, which is a cryptocurrency wallet, along with Monarch, many other sort of leading sort of cryptocurrency wallets that are using more decentralized properties as well as centralized properties. And so when I say centralized and decentralized wallets, you can sort of think of a traditional bank as centralized, where they have custody of your funds, and you go to the bank and you withdraw funds whenever you want. Assuming sort of there's no issues, with banking infrastructure like you saw in Greece, et cetera. And then a decentralized property would be you actually control the money yourself. So no one can say whether or not you can take it out or move it or do sort of whatever you want. And so you're seeing lots of interesting things here. You're having this huge movement on decentralized finance right now, with billions and billions of dollars locked up in different borrowing, lendings, and savings products. I'll touch on that a little more at the end of the presentation when we talk about, some of the work that we've done with the United Nations and some of the UN Sustainable Development Goals. Continuing on the finance side, you're also seeing it, these properties being used for, say, securities. So, and some of these, there's bigger examples than these, but I think these are both really interesting ones. You've got, think about traditional equity or debt being used as part of a blockchain layer that's actually fully regulated. And Fatburger, which is a relatively popular, fast food chain, did a $40 million securities raise on Ethereum, which is, a public blockchain. And they came out and said the reasons that they did it were shorter forecast performance periods, faster access to data for investors from increased transparency, and higher visibility. And more recently, you saw the Bank of Thailand do a $1.6 billion government savings bond on IBM's Hyperledger blockchain, but they actually sold that out within 2 weeks. Very interesting experimentation happening here. You're also seeing it come out of Europe as well in a lot of cases, and with traditional banks as well as government led initiatives out of Europe. So it's very interesting to watch the regulated space of some of these blockchain securities and some of these parts that are happening, because we could very much see a world where this starts to impact, traditional securities, traditional debt instruments very significantly. Now, I want to touch on how, blockchain's also impacting different industries like ag tech, media and entertainment. And so, in the agricultural sector, you can see 50% of GDP is actually driven in developing regions by the agricultural sector, but only 2% of lending goes to that sector. And so you've got this very big discrepancy. And the reason you have that is you have 500 million smallholder farming households, about 2.5 billion people that rely on agricultural production for a living. And so you see that it's very fragmented. And so it's very hard for financial institutions to actually lend to these individuals, or lenders to lend to these individuals, these farming households, very effectively. So you're seeing companies like Agrio work with multiple technologies, including blockchain, as part of creating credit profiles that then can't be manipulated. But they're using, for example, satellite imagery, geospatial mapping, measuring soil moisture to predict agricultural crop yields. So you can think of, like, for example, any place on Earth, they can tell you what has the crop yield been in the last 20 years through satellite imagery, and then predict what it might be this coming season based on a number of different factors. They have over 500 different things that they're looking at. And all of that then creates these credit profiles that then lenders can use to lend money on effectively to these farming households. And there's a lot of problems in emerging markets because you don't have, for example, asset registries. So you don't actually have the ability to give collateral to a bank in a lot of cases in emerging markets. And so collateral in this case is actually future yields. So, the future wheat production is actually the collateral for the bank to make a loan today. And so you get really interesting aspects of this that can start to emerge to unlock capital and start to invest more into the agricultural sector that drives massive returns essentially for economies in emerging markets. In the media and entertainment space, you're seeing companies like Alibaba. They've, in 2019 alone, they filed 470 blockchain patents. One of them in particular that I want to highlight is tracking music copycats. So measuring originality analysis and determining similarity ratios of songs or music that's coming out, and then having this all stored on a blockchain layer to ensure, authenticity as part of that. And there is no similar platform like this in the world. This is still quite early, even for someone like Alibaba, but it's interesting to see how some of this stuff is emerging, because then that impacts the entire royalties industry in the music industry. And, continuing on the music space, you've got companies like dept that are working on solving a $4.5 billion problem in the music industry around reported to actual play. So, in the Middle East, many of you might use Spotify or Angami as a streaming service. And, there's many others out there, Apple Music, Tencent, et cetera. And so companies like dept are actually working with those streaming services to essentially reduce the discrepancy between reported plays and actual plays between those streaming services and artists and labels. Typically, this is a $4.5 billion problem every year. And essentially, you can think of it almost like an auditor for the music industry. And this is, going to apply to many other industries as well, but creates a lot of value by being able to, say what's actually happening in terms of plays and what those royalties should be in a more trusted manner that all the parties can essentially now see in real time and ensure is authentic. And so this eliminates sort of the need to trust the streaming service on reported plays. And right now, what actually happens is there's an audit clause in these agreements, and they'll audit it. It's very expensive, takes many years. And so the future of this is real-time auditing, essentially, on a blockchain layer. And you're also seeing, if you've heard of NFTs or non-fungible tokens, you're seeing this really explode right now across different aspects. One of those is the gaming sector, which is projected to be a $2.3 billion sector in blockchain alone for gaming by next year. And you're also having a lot of these gamers buying a lot of cryptocurrency. So millennial gamers are 11 times more likely to buy cryptocurrency than non-gamers. And so you've got companies like NBA Top Shot that has $500 million in revenues alone this year from relatively low or negligible revenues last year. And so you're seeing this massive increase because they're essentially selling digital collectibles. You've got companies like SoRare doing this with European football. So many of you might be familiar with, say, like trading cards or, hockey cards, soccer cards, football cards, whatever. And now you can think of NFTs as this ability to have digital collectibles. So how do you actually track everything in a digital world? This could even be art pieces. You probably heard about the $69 million piece of art that was sold. And so how do you actually track authenticity of this? We believe that everything in the future in a digital world is going to need to have authenticity. So we actually see this as future trillion-dollar industries around NFTs and the world sort of moving more digital, with being able to verify and validate anything in a digital world. Um, in sort of a quick nutshell, we almost look at it as like, in the physical world, you have land titles. You know that you own that land, and that's clear, and no one can essentially take that from you, right? That's what you have in, developed economies and sort of more stable economies. And in a digital world, you can think of it in a similar way as, you know, why shouldn't we be able to track what you own in a digital world, and that it's yours and that it's authentic? So could you have a Gucci handbag in the future that costs $10,000 and it's fully digital? I mean, if the world's moving more digital, you're going to have these things that you need to prove is authentic. And we don't think that these, say, major fashion brands are going to disappear in a digital world. We think they're very much going to thrive in this context. And it sounds a little far-fetched maybe, but it gives you an idea that everything in the digital world essentially needs to still be tracked for ownership. You're seeing as well in the education space, what's going on. So with, tracking credentials and authenticity, this can be a big problem. I mean, many of you might be aware and remember Yahoo. So Yahoo CEO, Scott Thompson, had a fake degree. You might be aware of, one of the biggest media personalities in Japan had a fake degree and got fired. I mean, MIT's Dean of Admissions had a fake degree. And so, you've got these really interesting cases where it's eroding value from the system, and from people being able to trust, in certain cases, these credentials. And the cost when you determine something like this can be very, very big to companies like Yahoo and others. And so you've actually got, authenticity of credentials becoming a bigger and bigger thing. And this is being led by companies like MIT, INSEAD, Open Source University. And so here's actually an example. INSEAD's actually got all of their degrees on blockchain already, all of their credentials. So you can see over here on the left an attestation certificate. You can see in the middle, you can see a transcript, and on the right, you can see a diploma. And you can see over here where you can download this blockchain receipt. And this makes sure that it's authentic, because this links to the original and it can only be inputted into the system, and it can't be changed. And so once it's inputted, you know that that credential is essentially authentic. And that's what now an employer can actually just click, or any student, alum, et cetera, can click to validate and ensure that their credentials are essentially validated by that institution. And on the social impact slide, and this is the last one I'll sort of go through, and then we can open up to more questions. But one of the, and we've worked with the UN across a lot of different aspects, but one of the big things that the UN is looking at as part of the Sustainable Development Goals is how to lower remittance costs to at most 3%. And when you look at that, one of the only technologies we believe is sort of going to solve this problem is blockchain and decentralized finance. And you're also going to have some centralized finance using blockchain layers as well. But we very much see a world where decentralized finance can enable the leapfrogging of traditional banking systems. So in emerging markets, you've got over 1 billion people that are unbanked or underbanked. And what's happening is essentially these financial institutions are essentially saying that these people don't have enough money and aren't worth our time to work with. And you're now having these layers that are getting much, much more cost effective. There's still a long way to go to be, fully rolled out and people being aware of them and starting to use them. But you've got borrowing, lendings, and savings products that are much more global, with essentially no onboarding cost or relatively low onboarding costs. So this, we believe, is going to create the potential for leapfrogging of traditional banking systems with decentralized finance systems in the longer run. Right now, some of the challenges around decentralized finance, and you may have heard the terms like yield farming or some of these other terms that are going out, is there's very high gas fees, and it's still so transaction fees, you can think of it like, or fees to use the blockchain. And that makes a big barrier to entry still in certain cases. And you're also just seeing it being very complex still. And so this is why a lot of people are saying not using these products entirely yet. Keep in mind, you do already have companies with tens of billions of dollars locked in these decentralized finance tools. And, even directly, we have products that we put capital into that, we generate upwards of 30, 50, 100% returns annualized on yield farming. So you get these really interesting things happening with decentralized finance that create lots of interesting opportunities. But this is a big one that we're excited where the UN's making a lot of traction, but also a lot of companies are making a big dent right now in decentralized finance. I know we went through a lot of those quite quickly, and I think it gives a little bit of an overview of what's actually happening in blockchain, a little bit about some of the crypto side with NFTs and DeFi. I'm happy to answer any questions now. Also happy for you to send me an email if you think about questions later that you want to ask. My contact information is here, but happy to answer any questions.
Thank you, Ali, so much for sharing your knowledge as well as your time. To all our listeners, thank you so much for attending and making this webinar a success. And thank you to the institutions for supporting us. This session was really informative, and hopefully it has given our participants some insights on how blockchain could transform their workplaces.